Good morning, good morning. How's everybody? Can you guys hear me okay? Make sure the microphones are picking up and you guys can hear. Just give me a Y if you can hear. And then we can get things rolling. How's everyone doing? Hope you guys had a good summer. It's pretty much coming to an end now. Kids are back to school. I dropped off my daughter this morning. Everything went smoothly. No crying, no freaking out. Although my youngest one, 4-year-old, she's going to start her first day tomorrow. So we'll see how things fly tomorrow morning. But glad that you all could make it. Summer's coming to an end. Markets are making some serious moves. Serious moves. You know, with the currency markets, we were talking about this over the weekend. The currency markets, we've been waiting for the currency markets to make some serious moves for a while because we've had situations where price was ranging. So it wasn't really doing anything. It was a little bit up, a little bit down, a little bit up, and it wasn't going anywhere. So we've been waiting for quite some time for these ranges to break out because without the ranges breaking, there's no momentum. No lasting momentum, nothing that could be sustained over time. So we've seen that, okay? We're getting some big breakouts right now. So we could touch upon that today, definitely. And we'll also look at the overall stock markets and see what they are doing because this past summer was a massive setup, if you ask me. And I've laid out all the evidence to support that, okay? Remember at the beginning of summer, we had Jim Cramer come out and say this is going to be a great year, a great summer for stocks? Yeah. Well, exactly when he came out and said that, prices dropped after. So anybody who thought it was a good summer for stocks and purchased stocks right when he came out, they were holding positions underwater for quite some time. Okay. Here's a daily chart of the S&P. And this is exactly where Cramer came out and said, it's going to be a good summer for stocks, right? So as you can see, what happened with stocks? Dropped quite significantly. Now, anybody looks back, they'll say, yeah, it was actually a good summer for stocks. I mean, summer starts in like June, right? You know, we have spring and then June, summer starts. So it was a good summer for stocks. Yeah, well, if you would have bought it when he told you that it's going to be a good summer for stocks right in June when the weather is hot, you know, you would have been holding the bag up until this level here. And it only went a little bit higher from that point. And what has been happening ever since? Big drop in price. So here's the interesting thing, okay? Because I always want to make sense of why things are happening, okay? Because I know Jim Cramer is not our buddy. He's not my friend. He's not your friend. And so why would he suggest that's going to be a good summer for stocks? Because at the end of the day, look, the stock market did rally throughout the end of June, July, and all through August, right? Mid-August. It did rally. So why did it rally? Well, that's the interesting question. So I asked that of myself. I asked that, why did the markets rally? Why did they let it rally? And then I looked at the CFTC data and I was like, there you go. There you go. He's not our friend. He's not telling us that the markets are going to rally because he wants us to buy. That's not the reason why. Because the whole time that the markets were rallying up here, guess what the banks were doing? Entering into short positions. Okay? So as everybody was buying, guess what the banks were doing? Selling to everybody. Why would they sell? Why would they be selling? Why would they be so happy to sell all the way up? Why would they be doing that? That's the big question. And I think I know the answer. And it has to do with the fact that right here was a massive institutional selling area. Okay? This is massive. A massive institutional selling area. That means the last time the banks came in and sold this market aggressively was up here. in the 4,400 area. Okay? So Jim Cramer comes out, tells you to buy the market, and as you're buying, the banks are selling to you. And now we see the big push to the downside. Okay? For me, this push that we've been seeing all throughout the second half of August and beginning of September, this is the banks coming in and flooding the market with their sell orders. Okay? That's what I'm seeing here. Flooding the market with their sell orders. So let's be aware that this is extremely important to understand. This is why I'm starting off this session explaining this to you, because you need to understand this. Okay? This is vital going forward. Okay? So if you're reading the newspapers, you're watching the media, be careful with what they say, because what I'm seeing right now is the institutions are coming in with massive selling in preparation, very likely for a larger drop to the downside. Okay? Our analysis says that everything we've looked at is suggesting that there's going to be a very large drop in the markets. Okay? It could happen the rest of this year. It could happen next year, but something is going to happen over time, and it's more likely than not going to be a drop. Okay? So let's just remember that going forward. Big drops in the markets are what we are watching for. Now, you know, when we look at the Russell 2000, this is the situation that we got. You see the selling here? You know, we draw these zones not because they look pretty, but because these are the areas that we've located on the charts where the institutions were selling. And if they were selling there before, guess what's likely going to happen when price gets back up there? They're going to sell again. And so you see how price reacted from this selling area and is now dropping? Exactly. And you see how price entered into this green area and then they bought? Well, because these are the buying and selling areas that we're locating on the charts. So we have buying taking place from here, and we have selling taking place from above. So we've got two forces in play. We have buying from the 1600s and selling from the 2000s. So what's going to happen is price is going to stay within this range until one of these areas give way. All right? So that's what we got going on. So if you wanted to trade this market, you would want to either wait for that supply area to be removed, and if that takes place, guess what? Nothing to stop the market from making all-time new highs. Otherwise, if demand gets removed, nothing to stop price from dropping even further. Okay. So we look at the Dow Jones, room for it to drop. You look at the Nasdaq, it's got that situation, a buying zone and a selling zone. Once this area gets taken out, nothing to stop price from dropping. Okay? And on the SPY, nothing to stop price from dropping. So we're going to be monitoring that, and we're going to keep this in mind when we're looking for trading opportunities. Because right now, what we should be focused on, at least this is what I'll be focused on, if I see all the evidence that the institutions are increasing their short positions, okay, on a massive scale, they're increasing their short positions, then I want to be short the market, okay? Just take another look at this. This is the positions held by the institutions, all right? 45,000 longs versus 103,000 shorts. Longs are cooled off. You see how the cells are blue? That means they're not focused on long positions. You see how the shorts, the column, is red? That means they're becoming aggressive with their short positions. So this is telling me that they're very much focused on price going lower, right? Because they think the markets are going to drop. So I want to look for stocks that are weak. I want to look for stocks that are telling me by looking at the technicals that there's more chances that price is going to drop than rally. Okay? So I've made a list of stocks. We've gone through this with members. But we can take a look at some of the stocks that you guys have on your watch list, and we can see whether or not the banks are interested in going long or going short. So if there's any stocks that you want to take a look at, just type in the ticker here in the chat box, and we'll have a look at those. Okay? All right, so I asked you guys to type in some charts that you guys want to look at. And what do we got? We got copper, steel. Don't look at those. Nasdaq, we looked at that already. And what else? That's all you guys want to look at? Okay. Well, we've already looked at those, so let's move forward. Let's look at gold. I like gold. I like gold very much. I think the banks like gold very much as well. They've been trading it really aggressively. Okay. So, as you know, in the EURJPY report and the analysis that we've been doing for quite some time, we were able to determine what the storyline of price was, okay? We look at the CFTC data. We look at the moves that are being created on the charts. We look at the buying and selling that the banks are doing on the charts. And when you put all the pieces of the puzzle together, it tells you a story, okay? That's the Sherlock system. It's like Sherlock Holmes going to a crime scene. He doesn't know anything except for collecting the data, right? You just show up on scene. You don't know what happened. You see the scene. You see what's going on. You collect the data. You collect the evidence. You put it together, and it starts to paint a picture of what's happening. And if you have successfully put the picture together, then you should be able to determine what's going to happen next. Okay? That's the key thing. And with gold, we've been tracking this and been following along and looking at their positions. And what we were able to determine was that right here was a major institutional area of selling by the banks. Right here. We can look at the data, and the data was very clear with telling us that the banks were selling gold here, okay? The banks were selling gold here. You remember what happened back here. They lured retail traders into buying because of the war, right? When there's a war, buy gold. Isn't that what they tell you? Right. They came up with forecasts saying gold was going to go to 2,500. You remember that? Goldman Sachs or JP Morgan, one of those banks, they came out and said gold was going to 2,500, so everybody and their grandmother was buying gold. And then they offloaded their massive long positions that they had. Isn't that funny how that worked, eh? So coincidentally, it's just amazing how they were already massively positioned with long positions. And the war breaks out, the headlines come out, and then they come out and say, gold is going to 2,500. And then as everybody gets excited and starts buying, they offload their positions. And it's just been back and forth ever since. They drop price, retail traders get in late, short, and then they reverse it up, and then they get out of their shorts. And it's been the same thing over and over and over, okay? So, you know, this last drop here, they lured retail traders into getting short, okay? And then I said, you know what they're going to do? They're going to rally price up because there's too many traders that are short right now. Too many. So they're going to rally price up. They're going to shake out those shorts. And then as retail traders start getting in long, they're going to fill in those short positions at the institutional area of supply that we located. And then they're going to drop price. Boom. And lo and behold, guess what happens? Exactly what we said. Okay? To a T. I mean, could you get more in line with reality than that? Right? We are telling you what's going to happen. We are following along what's going to happen in the markets before it actually does it. We have the logic and reasoning behind it that's in line with reality. So, I mean, this is the way we trade. This is the reason why we are so successful with how we trade, is because when you know what's really happening and you can follow the storyline of what's happening, then it's just a matter of finding your entry points. So gold they're focusing on shorts right now, okay? And that's what's been happening. Again, going back to the report, the latest data, the analysis that we did, they're filling in their short positions again, okay? We can see that on the charts. They're filling their short positions again. So price rallied up to supply. Now they're filling in their short positions. And there's no reason to suspect that price isn't going to continue dropping over time. No reason to suspect that it's not going to happen. So that's what we're watching for in gold. Okay. As you can see, we have this descending trend line on the 4-hour chart, and price rallied, and now starting to turn over. Okay. Could it break up? Yeah, sure it could. Okay. But what we're seeing here, the technical analysis that we're doing on the 4-hour chart, is going to help us to determine what time frames we should be expecting a continued push to the downside. Okay. That's what we're going to be focusing our attention on. All right. So that is what's going on with gold. We got a chart Tesla. Somebody wants to take a look at Tesla. We can do that. TSLA. I was looking at this chart just the other day, and things had to be shifted here because of the stock split. All the analysis that we did is higher up. Look at that. Okay. So I wrote to TradingView and I say, well, what do we do about this? The stock splits, and all of a sudden, all my analysis is a lot higher on the chart because it didn't move along with price. Is there a way, like, there should be a way a stock splits and then they take your analysis, all the chart work you did, and perfectly align it with where it should be on the charts, but that is not the case. So I've been told that what we got to do is we got to shift it ourselves. We got to select all the data, all the chart work, and shift it. I don't know how well that's going to work. To me, that doesn't look like it's going to work very well. It's not a very feasible option, but oh well. Okay. So you're asking me to take a look at Tesla, but unfortunately I don't have analysis for it because I have to redo everything. But we have institutional demand that's in play right now. That I can tell you, right? I wouldn't be interested in shorting Tesla until this institutional area got taken out. That's around the 205 area, 206. If that gets taken out, I'd be interested in shorting. Otherwise, if that hasn't been taken out, I'm not looking to short Tesla or take any moves on it just yet. A good one is NVIDIA. This is a good one. NVDA. This is a good one, okay? Because what we've got, same dynamic. You remember what I was talking about with having supply and demand, okay? And what we have here just recently is a break down right through that area of buying, all right? Now, if it could sustain this break here on the lower time frames by looking at the lower time frames, we can definitely see a drop in price form from here, okay? So I like NVIDIA for a short. It's something that I'm interested in. I wouldn't short it after this push to the downside. And also we got institutional buying that's coming into play here. You see that? If you think this is a coincidence that a green zone, meaning a buying zone, comes into contact and then we see price reverse to the upside, it's no coincidence. Okay? So there's buying pressure here on NVIDIA. So I wouldn't want to be interested. I wouldn't be interested in shorting NVIDIA until selling pressure came into the market. All right? Let the buying pressure come in. Wait and see what the banks do with it. See how high they're willing to push price up. Watch how the markets react during this process. And then when you see selling coming back into the markets, if the indexes are in line with that drop, then take advantage of that. Okay, and then you take your trade. But at this point, it's already dropped, so I'm waiting for it to give us some kind of a rally. Okay, so let's take a look at oil. Somebody wants to look at oil. Not much to see with oil here. Okay, I did some extensive analysis on this, and I posted some of that analysis on the EURJPY report. Price is ranging. It's going to range, and I said already, probably for the rest of the year. So I wouldn't be interested in trading oil anytime soon, okay? I think that there's a very good chance in time price is going to drop, okay? I think there's a very good chance of that. but it's got to break out of the ranging first. It's just going to be ranging for a while, probably to the end of the year. And then next year, we're going to likely, the odds are that we're going to see it drop. Okay. After a significant drop, it's probably, over the very long term, going to rally back up again. So there's a lot of question marks still with this one because there are no trends, no legitimate trends. And when you don't have trends, it's very tough to be able to determine exactly what price is going to do and the time frames it's going to do it within. Okay, but just looking at the overall market and deciphering what's likely in play right now, that is what my conclusion is. The dollar, we could take a look at the dollar. So the dollar is very strong, as you can see, very strong when you relate it to the other currencies. It looks like we're hitting an institutional selling area right here. You see how I have this zone in red? Okay. So we could start to see downward pressure form off of here. All right. And that's great because this is in line with what we're seeing with the euro. Okay. The euro, we have buying pressure coming into the market right now. We have a buying zone that was contacted. All right. And when you look at the CFTC data, it's really clearly telling us a story that the banks are likely going to cause a rally up in the euro because of their positioning. Okay. And again, I went into much detail with this with the students, and they can read it all in the EURJPY reports, the reasoning behind everything. So, so there's a good chance that price is going to stall at these highs. Very good chance. Okay. If somebody asked me what are the odds the dollar is going to stall and drop, I'd say, listen, you have to understand the context of price right now. Price is very bullish, very strong. Okay. That's what it's been doing. Is it going to stall this week, next week? That's the question. Okay. Because we're hitting a weekly selling area, weekly. So it could take multiple weeks just to complete the stall. Okay. Just to slow down the momentum. It could take multiple weeks to slow down momentum and then multiple weeks to reverse the momentum. So you're looking at, a month, 2 months from now. So when I say that this could stall out and drop, don't expect it anytime soon. Okay. It could happen soon. Not likely, but it could happen soon. But this is what I'm watching for. So this is important to know because if you're a currency trader like I am, and you want to trade the currency markets, just understand that, yes, we've had a lot of strength in the dollar, but there's very decent odds this strength is going to pause, run out, and price is going to reverse. Decent chance. Could it just continue higher and rally straight up? Sure. Anything is possible. Is it likely? Not likely. Not likely. It's possible, but not likely. All right. So if I wanted to trade the currency markets, which I do, and I'm getting ready for it, and I am pumped and excited to get involved in the currency markets, because for quite some time there hasn't been high odds trades because of the ranging that we've been within. But now that that range is breaking out and we're getting momentum, the banks are showing their hands. Okay? The banks are showing their hands. It's basically, I've been watching a poker match and I'm watching the bankers play. All right. And I can see who's winning and who's losing and what they're doing. But now they're starting to show me their hands. Okay. So now I'm more inclined to get involved in this game because I'm playing against a game that's completely rigged by the bankers. So, I want all the odds in my favor. And so if they're showing me their hands, now I see what I can play. The odds will be in my favor. So now they're showing their hands. They're showing me what they're doing with price after breaking out of that range. So now I want to wait because I don't want to get involved in a market after it's made its move. Never do that. That's big trouble if you do that. Now I'm going to wait. I'm going to wait for this reversal in the dollar. I'm going to wait for it to drop because it's got to drop at some point. It's overextended itself. Now I'm going to wait for it to drop. After it drops and it sits and the momentum to the downside slows down and it starts to shift to the upside, that is when I'm going to get ready to pounce. Okay? Because the cards that they're showing me right now is that they're removing obstacles from price for price to continue going higher in the future. Okay? They're removing obstacles that would normally keep price from heading higher. So if they're removing those obstacles, that means they have intentions in the future to continue price to the upside. All right? So I just want to wait, be calm, patient, wait for it to drop, wait for them to come back in with buying. And once they do that, I'll be looking to pounce. And what would I like to trade? Oh, in the future, I'd like to trade any dollar pair to the upside. I think US dollar Japanese yen is a prime chart to trade. Okay? It's very strong right now. The yen is extremely weak right now. But once the dollar drops and settles down and we get some kind of a reversal on this one to the downside, once they start buying the dollar again, this thing will rip because there's no stopping price. Okay? You look at where we are on a 12-month chart, this sucker can go. It's got a lot. You see, all these points that would typically cause price to stop, it's just rallying right through there. And once it makes it through this top area here, this 150 area, there's nothing to stop it from getting up to the 225. Okay? Yeah, that's over the very long term. But I don't see any reason why it couldn't get there. Not by looking at the technicals. And I know you're thinking, well, we're at 142. You're talking about 225. That's like crazy. Well, yeah. Don't you think it was crazy when it dropped from 250 down to here? You know? Yeah, crazy. 3 years it took to do that. And you know what I've learned in this trading game? That if there was a moment in time where price dropped from one level to another level within a certain period of time, guess what happens when it goes in the opposite direction? It typically will go just as fast. Okay? Typically will go just as fast. And you see already the size of this big green candle here on this 12-month chart. That's aggressive. Okay? We had 3 of those on the drop. So we could see over the next 3 years, this really take off. So I'm focused on that. I really like this trade. I like this idea. I think it's in line with everything that I'm seeing on the charts. And that will be definitely one that I will keep on my watch list. All right, ladies and gents, any other questions from you guys? I'll get to it, and then we will end that session. Let's see. I see. While the non-commercial are still net long gold. Let's see. Non-commercial are net long. Yeah, they're net long gold. Yeah. Even though they're net long gold, makes no difference. Because what you have to understand is they're net long gold. But listen, wouldn't they be net long gold if they were, if they had acquired a massive long position just recently and rallied price up? They would still be net long gold after they start taking profits. It takes a while for them not to be net long gold. It takes a while for them to offload all those long positions and accumulate all the short positions so that eventually they're net short. So you don't want to just look at it and say, oh, they're net long gold, so I don't want to be short. No, you want to see in what context this sits within. Okay? That's the important part. Swiss yen, don't look at that chart. I don't trade it. I don't trade it. It doesn't have good price action. I know some people are looking at pound yen. I don't know about that. Okay? Pound is extremely weak. The reason why you're getting this bump up is because recently we're contacting this area of demand and we're expecting somewhat of a move. So yeah, short-term pound yen looks great long. Okay? Short-term pound yen looks great long. Because of this potential reversal that I just talked about in the dollar and the euro, you know, pound is likely going to follow suit. So it's likely going to be strong. And look at what the dollar's doing. Look, okay? Just sitting. Doing nothing, and look how weak the yen is. Okay, so pound yen short term, yeah, looks like it's gonna fly. If I had to just open up a trade, you know, on any currency pair, it would be long Japanese yen. Yeah, US dollar Japanese yen. Pound yen would make a good one. Euro yen even. Okay, see the euro yen. would make a good one. Institutional demand in play. Yeah, it looks good. Shifting momentum, breaking the descending trend line on the daily chart. Yeah, it looks good. Yeah, no reason not to think that this is going to go higher. Everything is in line with that. Okay, we good? We good? We ready for this week? We ready to take this on? We ready to make some money in the markets? Obviously, I'm going to go into some much more detail with members of the school. If you haven't joined our school and you're looking to learn, you got to join the school. All right, you really do. We're going to start a class, level 1 class, September 12th. We're going to look at a historical chart, Aussie chart. We're going to be looking at the weekly chart. What are we going to do? We're going to look through the chart and we're going to draw supply and demand zones from a clean chart. We're going to look at a chart that had no previous history, and we're going to locate all the institutional buying and selling, and we're going to draw all the institutional trend lines. What are institutional trend lines? They're the trend lines that are being observed by the banks and their algorithms. I'm going to show you how we draw the trend lines, why we draw the trend lines, why they are important to us. We're going to teach you all about how to locate institutional buying and selling, and how do we know where price is eventually going to go to. It's the foundational course that we offer here at the school. You can't achieve level 2 skills or level 3 skills without completing that class. So if you're interested in learning, join, watch the video lessons, journal them, do as much learning as you can, sign yourself up for the class that starts on the 12th of this month, and then come to the live classes and start learning. By Christmas time, you know how much knowledge you can have by Christmas time? Your trading could change dramatically. All right? Anyways, you know the website, whiteoakfx.com. All the information is there. You just got to go to the website. Look, I'll bring it up. You just got to go to the website, see the big Start Learning Now button. Boom, just click on it. That's it. Easy breezy. And it tells you, look at the offer you have. This is amazing. $175 for 3 months. Are you crazy? 175 months. So 175 bucks between now and Christmas. You know how quickly you can lose 175 bucks? Like this, okay? you know how quickly you can make 175 bucks with the knowledge that you're going to gain, in the next three months? You can gain enough knowledge in the next 3 months to prevent you from losing 175 bucks. Okay? If anything, to prevent you from making bad mistakes when trading. Okay? But the knowledge you'll gain in terms of being able to make smart trading decisions, it's huge. It's massive. You're talking about financial future for the rest of your life. For you, for your future family, or for families that you have now, it's cheap. 175 bucks. Okay. I've contemplated bumping up the price because of all the amount of work I have to put into to give you everything that we give you, the analysis, the lessons. I mean, it's just, you've got so much to do. You sign up today, you could be busy 12 hours straight for the next, what are we, 8 days away from class? For the next 8 days, you could be working 12 hours straight on material. Never going over the same material, just material after material. You could be taking down notes. The amount of information that you could have is just ridiculous. Okay, so I'll leave that with you guys, and that's it. It was fun, right? Good time. I missed you guys. I've been busy. It's been the summer, Been wanting to entertain my family after 2 years of being locked down. I said, hey, it's the summertime. I'm going to be doing a little bit more going out, restaurants and this and that, and beaches, kayaking. But now I'm back in the saddle and ready to go full throttle on this sucker. All right? Anyways, thank you guys for joining. I appreciate it. Make sure you like and subscribe to the channel. Make sure you share it too. I'd appreciate any support you offer. Okay, that's it, ladies and gents. Enjoy the rest of your day. We'll talk to you